I'm here again with Casey Allen, the founder of the Enterprise Rising Conference. Casey, what is your favorite piece of feedback that you've heard over the years about Enterprise Rising?
One thing founders give me a ton of feedback on every single year, now that we've done this 5 years, is the talk in which I bring a founder up on stage whose startup crashed and burned, and they deconstruct why they think it crashed and burned, what went wrong, and what they might have done differently. And these are often very high-profile founders who had everything going for themselves, but they still couldn't quite turn the corner. And so those are the kind of talks that, quite honestly, founders give me a ton of feedback on. They loved it. They want to hear more about that because it's really educational.
How is Enterprise Rising different this year?
If you've ever attended an online event, you know networking sucks. Slack and Discord really just don't cut it. So we have custom built for Enterprise Rising 2020 an online platform that's like Startup Masterclass meets The Sims, where every attendee has an avatar, you're in a building, you're sitting in chairs, you're sitting in couches, you're having real video chats with the people next to you. So what we've done is we've recreated an actual virtual environment where networking happens just like it does in real life.
Casey, when is Enterprise Rising and how can people get involved?
Enterprise Rising is the end of October, the 20th and 21st. It's 2 full days. It's all online, so you can dip in and out for as much or as little as you want. Go to enterpriserising.co. That's enterpriserising.co. And you can use discount code UPSIDE to score 20% off as many tickets as you want. So discount code UPSIDE at enterpriserising.co. All the details are there. The entire conference is online. It's going to be a great time.
The thing about raising angel and raising retail funding is that, it's not like you just raise a big VC round and then you go back to work. I mean, you're always raising money every month when you commit to raising, retail capital from angel investors and family offices.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Podcast Network himself, Eric Hornung.
Jay, we're doing it, man. We talked about this, 2.5 years ago?
You're doing it.
You're doing it too.
You talked about this too. Yeah, well, less so. This has been your baby.
Yeah, I think that we have a unique perspective and a unique setup compared to other podcast networks. So, dear listener, if you have not heard or seen or follow us on Twitter at Upside FM, where we've announced this, what you'll soon be hearing on the Upside channel is that we are launching 2 podcasts, full-fledged podcasts.
Just new podcasts.
New podcasts to test a concept that we can make a network of geographically localized podcasts for the early stage business space. The first 2 are going to be in Cleveland and Cincinnati, and the Cleveland one's called Lay of the Land, and the one in Cincinnati is called When Pigs Fly. So we'll be talking more about that in the future.
Really fun intro music, great album art, great co-hosting teams. Really a lot of work went into this, Eric. Seems easy conceptually, but there are a lot of steps.
There really are. I started interviewing for this in April of 2020, and now we're just getting going. But a lot of this is going to get better and smoothed out over time. Once you get the talent selection, then you have a process that's run where we're taking what we did with Upside, what we helped out with Tech.min and a few other podcasts that we've kind of helped get off the ground, taking all that knowledge, taking everything that's in Jay's head, because really that's where all the brains are, Mr. Valedictorian. And
you remembered.
Yeah, it only took me 8 times of reminding me. And we put all of that into these 2 podcasts, and we're building out a way that we can scale this to do hopefully 30 to 50 cities into the future.
Quick plug. If you're listening to this and you're like, I'm in a city, I like making podcasts, and you think that your city needs a podcast, hit us up, email us, hello@upside.fm, let us know. But Eric, speaking of...
Yeah, because I think one of the things that needs to be done in cities is just have more exposure, right? Like When we started Upside, we thought, oh, maybe these companies outside of Silicon Valley aren't getting enough exposure. And then we had 200 plus episodes or whatever we're at now. And we realized that 60% of the founders on our shows haven't ever been on a podcast or haven't had an article written about them. Now, if you ask the same group of people in San Francisco and New York, it's going to be completely different. Every single founder is getting that kind of exposure. So if we start with exposure, then hopefully that will lead to more of a recognition around the community that there are funding opportunities, that there are founders that they can help, that there are things they can do to grow their local business infrastructure, create jobs, and make their city a better place to live. And a lot of that's through things like angel investing.
Speaking of angel investing, speaking of different cities and different chapters across the country, today we're talking with Nathan McDonald, the CEO and managing partner of Keiretsu Capital, but we're talking specifically about Keiretsu Forum, a global investment community of accredited private equity angel investors, venture capitalists, and corporate or institutional investors. Keiretsu Forum was founded in San Francisco, East Bay, in California in 2000 by Randy Williams. It's a worldwide network of capital, resources, and deal flow with 53 chapters on 4 continents.
Jay, we're diving back into the world of angel groups here. It's a different style of angel group, but we haven't been around an angel group since we talked with Todd Fetterman of North Coast Angel Fund.
Yeah, it's a good time to dig back into it. I'm interested to hear more about it. Keiretsu Forum seems to make the angel investing process a lot easier for a lot of these angels, helping them live the best angel investing life that they can, Eric.
Just like our friends at Ethos Wealth Management, who can help you, dear listener, live the best life you can, the best way possible. If you want to learn more about Ethos Wealth Management, you can go to upside.fm/ethos. That's ETHOS.
Let's dive in. Let's talk to Nathan McDonald of Keiretsu Forum. Interested to hear his perspective, and we'll get to that right after this. Let's bring in our friend Rob McDonald, a partner at Taft, Stettinius & Hollister, to teach us about private placements and fundraising. Taft, Stettinius & Hollister is a law firm known for assisting entrepreneurs across the heartland. As a reminder, the following remarks by Taft attorneys are for informational purposes only and are not legal advice. This information is not intended to create, and receipt of it does not constitute an attorney-client relationship. No person or organization should act upon this information without first seeking professional counsel. Rob, welcome back to the show. Happy to have you here. How are things in Cincinnati?
Fantastic. Great to be back on Upside.
What are the preferred instruments for raising capital? For example, convertible debt, SAFE, equity, and are there others?
Honestly, the preferred instrument is whatever instrument the lead investor wants to use. These days, it's very common to see all 3 tools used. Safes are generally viewed to be more friendly to a company as compared to convertible debt. And of course, equity is seen as the most basic place to start negotiating. However, equity rounds can be quite expensive in terms of fees to complete because it's a lot more paper and a lot more negotiating than convertible notes and safes.
Super helpful, Rob. If people want to learn more about Taft or yourself, where should they go?
They can check us out at www.taftlaw.com or my Twitter at RWM.
Born and raised here in the Seattle area, originally from Bainbridge Island, and then went to the University of Washington. This was during the late 90s, got out at the height of the dot-com craze at the end of 99. So it was quite an interesting time, and I had the good fortune of doing research on angel investing while I was at the Foster School of Business, the University of Washington, entrepreneurship and finance undergrad. I was just always fascinated by our technology companies in our local community, and how did investors and entrepreneurs get together, and really the fascinating history of the Northwest around entrepreneurship and that frontier mentality. And so loved the Seattle area, wanted to learn more about it. I did a research project with a group of students, and we had a chance to interview 25 what they called business angels. And so I got a chance to learn about who an angel investor was and what they did. And then it was just fascinating as a college senior to be able to go out and actually talk to them and hear their stories and hear how they interacted and how they found deals and this and that. And it really got me hooked. And I loved being able to hear the stories and the personalities that were involved and the serendipity that was involved in angel investing and finding great opportunities, and how impactful it was on changing people's lives, and how much a connection here or there can really make a big difference in who wins and who loses when it comes to technology and backing companies. So From that, started to do events during the middle of the dot-com craze. There was a lot of fun, a lot of activities, the demo days, demo nights, and all the things people take for granted. And then, today we just kind of invented that stuff back in the dot-com craze. So I cut my teeth through that. And then, the ups and downs of a lot of tough times economically, we kept going, we kept persevering. We did about 45 events from 2000 to 2005, and then rolled everything into the Keiretsu Forum. From there, we've grown the last 15 years to be a large global angel investment group. And 5 years ago, we started Keiretsu Capital. And so I've been investing in the companies that have been coming through that are angel backed as well here the last 5 years. So that's kind of a 20-year thumbnail in a couple minutes, but happy to dive in deeper. But I'm one of the unique folks out there that's really spent their whole career studying, researching the formation of formal, informal angel groups, how they work, how they come together, and now how family offices are joining the mix. So it's a lot of fun and great to be with you.
When you talked about we did 45 events from 2000 2005, who is we? Was that a company that you were running at the time?
Yeah, so out of my research project, it became clear there was a need to bring together all the different siloed groups here in the Northwest region. And so I joined with a consortium. Everything I've ever done has been in partnership with others, but we formed a group called the Investment Forum, which organized the first early stage investment forum here in the Northwest that brought together 300 investors and 15 companies. We ended up raising like 30 million within a couple weeks after that. That was in March of 2000. So out of that initial event that I helped produce and put together, we formed an organization that went on to do the Venture All-Stars and the Venture Map and private pitch sessions and all kinds of different things to try and make the Northwest a vibrant and active place to live, work, do business. That was our mission. And also to connect Seattle with the rest of the ecosystem on the map. So everybody would come to Seattle and have a different idea about what was going on when they left town. They seemed to be more confused than when they came to town. So we tried to provide an entry point where folks could get connected, understand the landscape, entrepreneurs could help with capital raising. And when investors came to town and they were looking for deal flow, we were able to connect them up and point them in the right direction. So that was the organization I worked with prior to getting Keiretsu Forum launched here in 2005.
Can you tell us more about Keiretsu Forum and its history before we get it into the Northwest?
So Randy Williams, the founder of Keiretsu Forum, he started about the same time I did in terms of working with angel investors. So September 2000, which was just after I graduated from college, he was forming the first Keiretsu Forum chapter down in the East Bay in San Francisco. Randy was fortunate to retire in real estate, and like many angel investors, was being pitched, solicited. It was a pretty crazy time back then for deal flow and investment opportunities, money being made, also money being lost very quickly. And Randy was frustrated with just kind of the lack of discipline in terms of angel investing and the lack of a formal process. He came from a real estate background, which obviously, as you know, has a much more formal due diligence and underwriting, way that they go about doing things. So Randy got together a group of his buddies that were a lot smarter than he was in looking at technology opportunities. Randy would bring in some real estate deal flow, and together they would form the first forum, which was a way of sharing each other's experiences around investing. We call it Mindshare, we call it Swarm Intelligence. And that's really the basis of Keiretsu Forum. It is community, it is Mindshare, it is, collaboration-based investing to help everybody be better investors, help avoid losing money. And so it began in the East Bay in San Francisco. At the time that we joined in 2005, they had, I think, 6 or 7 chapters. And then there was some organizational updates from there that allowed us to be able to grow to where we are today. So Keiretsu's hallmarks have always been our membership, who the members are, and then the process we put the companies through that originate the deal flow in a way that can syndicate across the network of investors that are participating with us.
What structures does Keiretsu have in place to make sure that Mindshare and Swarm Intelligence don't become groupthink?
Yeah, it's a great question. The herd mentality is definitely there when it comes to investing. It really is hard work. And so there's no shortcut to it. People have to put in the time, and by applying the proper people with the proper expertise for 80 to 100 hours per company, and then writing everything down. It sounds kind of simple, but it's amazing how many groups we go to that, they fund a company and you say, all right, well, can you send us over the notes, the DD report? And they still don't have anything actually documented, so you don't know whether some guy just liked the deal and then everybody else went along with it. So we write everything down, and then we let everybody make their own investment decision. And so ultimately, our folks are generally not herd mentality investors. Everybody's very independent. They're successful entrepreneurs themselves. Most folks don't invest in most companies. It's a small number of the folks that end up backing any one company of the whole chapter or the whole organization. And so we maintain that rigorous kind of intellectual independence as a facilitator, trying to ensure that there's not too much hype, there's not too much shortcutting of the process, so that by following the process, we get a predictable, productive result.
So if I'm reading between the lines here, and we've only had a couple of angel groups on the show, we've recently been talking about syndicates on AngelList. It sounds like what you're describing here is you have a large group of angel investors. When a company comes in, you have some number of those angel investors do a total of 80 to 100 hours of due diligence. You send those notes out to the entire forum or membership, and some of those members will individually invest in that company. You're not investing as an angel group.
That's right. Everybody individually invests, and then Keiretsu Capital is a top-off fund. So we'll come in at the tail end of the DD process. Once the members have invested, they have momentum, and they've finished off the majority of the round. We do have our Keiretsu Capital co-investment fund, but that's a very small percentage of the overall investing that happens. So it's everybody making an individual decision to write that check. Obviously, on the DD team, you hope you have folks with experience, with expertise in the market that then drive credibility with the rest of the investors. They look at it. And then this gets in front of, hundreds and hundreds and hundreds of investors. And these traditionally would be in-person meetings, physically getting together, versus the online platforms, which it's all, digitally driven without a face-to-face meeting, which I think has its own pluses and minuses when it comes to addressing the issue that you're talking about. It can be tough if you're not able to really vet the company and look them in the eye and chat with them and get that in-person interaction is very critical to everything we do. Having the angels actually integrate in with the company, provide support, be on the board, advise. If we don't believe the angels can materially impact the success of the company, it's hard to get a lot of traction. But, up front, we're screening 70 to 80 deals a month. 7 to 10 come through our deal screening. 2 to 3 go through the full forum process. Those companies then go on for due diligence, of which the majority of those do complete due diligence and get funding. But we're working with these companies for a pretty extended period of time. So our driver is traction in the marketplace, seeing that customer uptake. And we also do a lot of life science opportunities. So having the expertise in life science, the folks that are able to dig deep and understand the science, right? Everything's a cure for cancer, but do they really have what it takes to get through all the different regulatory and clinical milestones that they need to in order to deliver a return for investors? And Keiretsu is so diverse, whether it's consumer products, technology, life science. That's the thing. You've got to have lots of people that can look at lots of different areas. And that's one of the fun parts of our job, is trying to identify the top, 3 or 4 people we would think that would want to take a look at any new opportunity coming in and getting that due diligence team built out. We just had one coming through this month that's doing offshore wave energy, which we've seen a few times. We've had members be very successful with offshore wind projects historically. So we've been doing clean tech investing since 2006. So that was a fun one because we hadn't had one in a while, and I was able to go back and look at some of the earlier, ocean energy opportunities we looked at previously, and we'll be recycling that expertise for this particular opportunity. And hopefully the time has come for us to harvest the energy of the ocean. That would be a big positive, but historically there's been a lot of challenges to doing just that. So that's kind of a little bit of the thumbnail of kind of how we work with the opportunities and avoid that, groupthink challenge that can really cause a lot of problems with other investment organizations if they don't have a robust process.
And it sounds like you're putting together due diligence teams around each opportunity. There's not one dedicated due diligence team. You're sourcing from your membership the best group of some number of them on each deal.
Yeah, some folks are much more active with due diligence than others, and that's part of the art of the process. But by having many members, 8 to 12 per DD team, it makes the individual effort, nobody's looking for a full-time job. Nobody wants to lead a new deal, right? So by many hands making light work. And then we have full-time due diligence directors, and their job is to manage the process. And they're very experienced in terms of helping to draft the reports and organize and follow up and being the chief cat herder of the process. And that can be a lot of work just to keep everything moving forward, keeping the momentum going during the due diligence process, because it's typically 6 to 8 weeks from the time they go through and present initially to the time the DD report's done, and then they come back and do an update. So just sustaining that communication, that engagement throughout the process is also another screen of the entrepreneur's ability to execute on the due diligence process from their end and generate interest and engagement from the members. They have to sustain it for a long period of time. So it's not like it just come in, present, and then checks are written. It's an extended engagement, which again goes to your first point as to, how do we avoid that kind of groupthink situation? It's just there's a lot of energy that needs to be sustained for an extended period of time for people to get fully comfortable and invest. But then once the momentum builds and you get over the hump, then you get into the other end of the curve and it picks up quite quickly, and capital can, we had over $1 million raised for one company in 1 week last week. Email went out on Monday, and by Friday they had commitments of over 800K on our way to $1 million. I couldn't believe it, but this is a company that is so angel backed in the United States. I mean, they've been to every angel group out there. They've got backing from pretty much all of them. So if there's anyone that could do it, it was them. But it was really cool to see that many people supporting an opportunity that's gone through that much challenge for a long period of time, and they've earned the trust of their investors. And so when they put out the word that they're at the 5-yard line and need more capital to get there, people are willing to invest. And that's what's so key to angel investing. It's all about relationships. It's all about trust. It's not about hype, and it's not about, just trying to catch the next hot deal. This is a lot of hard work over a very long time. These are each marathon journeys, and, it's our privilege to support the entrepreneurs that are running the races.
What's the length of time or a range of length of time that I'm an entrepreneur coming to the forum? How long should I expect this process to take from initially entering the pipeline to getting to the point where you're sending out the email?
So it can be, we typically work for companies for 3 to 6 months in advance of them coming through the process. So the earlier we have an idea, and most of our deal flow, we originate from within our group. That's kind of another misnomer. Probably 2/3 of the opportunities are members actually going through the process that we participate in. But if there's a brand new opportunity, and again, it's well organized and it's angel backed and it's a serial entrepreneur, sure, come right in, go through screening, and then right into presenting and DD, and you're off and running. And so if you've got experience with the process and raising capital from angel investors, we're a terrific additional distribution point for getting access to just that many more potential check writers. For those who are kind of working through the process and trying to understand it, take your time and really understand the meaningful parts of it and how it works. From the time folks present, it's typically 2 to 3 months to funding. Again, 6 months to screen and present, another couple months to get due diligence done. And, obviously companies are always raising money, and we encourage them to always be raising money if that's, they have a round open, and, continuing to pursue that at the same time as they're working for their longer term capital goals. The thing about raising angel and raising retail funding is that, it's not like you just raise a big VC round and then you go back to work. I mean, you're always raising money every month when you commit to raising, retail capital from angel investors and family offices. So as long as you have that mindset and you're ready to go, and then it works out very well. And just trying to match up our process and the capital raising process and the calendar with the entrepreneurs is a lot of what we do every month, trying to connect the dots and give people, good direction on where to start and what the likely kind of best outcome versus the most realistic outcome is going to be, so they can plan accordingly.
How do you think about competition for deal flow, given, I guess, 2 trends? One seems to be this enhanced focus on speed of close. And then the second one seems to be that there's institutions who maybe used to be focusing on A, B, kind of crawling down into seed, pre-seed.
Yeah, we don't run into a lot of that kind of Silicon Valley mentality out in the rest of the world that we operate in. The entrepreneurs we work with. I mean, for folks who are in the good fortune of getting multiple term sheets and being able to set their VCs up for speed to close, God bless them. God bless America. Have at it, boys and girls. That's not the game we play. We can move quickly. Obviously, we all have got checkbooks. We can write checks quickly. We're more professional than that. We believe every entrepreneurial idea deserves to be vetted thoroughly. And you're an entrepreneur, you're going to spend a lot of time working on this company. I think you want to know as well as we do, is this likely to be successful? And I think that benefits everybody. So for those that decide they're going to, take a little bit of time, they want to be angel backed, they want to bring on the expertise, the resources that angels bring, then you got to go through the process to understand, well, what are those areas that, where are those blind spots? Where can angels, put in capital and also help me with building the company, whether it's technology or customers or whatever comes with it. In terms of the later round investors coming early, I haven't seen it. I mean, maybe they throw a check out here or there, but they don't actually spend any time or add any value beyond that, as far as I've seen. The biggest phenomenon we're seeing is family offices, and that's what we're most excited about in terms of later stage capital for our angel backed companies. It's angel backed plus family office backed is an extremely strong foundation for an entrepreneur to build off of. And so that's much more of our mentality these days, is going that direction. The VCs have gone so far downstream, so big unicorn chasing, and their dilution orientation associated with how much money they want to pack into these companies is just doesn't have any alignment with our individual investors in terms of what we want to do. And if occasionally we get one that works out like that, we had Mission Bio this last week raise 70 million, so that's fantastic. But much more commonly, we're seeing our B rounds and C rounds funded in a combination of corporate and family office and continued angel syndication. And they're raising, 12, 13, 16 million dollars doing that. So, and also online platforms are also participating in these syndications as well that we're doing for some of the later stage opportunities once they've hit their milestones. So yeah, not much impact from the later stage funds setting up their seed funds and kind of speed to close. I would say at the Y Combinator, kind of at the accelerator demo day level, sure, there's participants that come to that, but those are usually too early stage for what we would typically look at for our process, because there's just not enough information to be able to do due diligence yet at that point. Usually it's another 6 months to a year beyond that when we start getting involved.
What is that sweet spot for Keiretsu in terms of stage of company, size of market opportunity? What really hits the sweet spot for you guys?
Yeah, it's go-to-market funding. So it's $500,000 to $3 to $5 million to take your product to market, build distribution. So that means you got to have your product done, your pricing done, your go-to-market plan, your team assembled, and good information that we can do due diligence on to try and validate as many of those points as we can. And then with the angels coming alongside that opportunity, hopefully they're able to fill in the cracks. So that's the ideal opportunity for us. Obviously, life science companies generally don't fall into those nice little buckets. From them, it's much more of a regulatory data-driven model. And so we have a whole write-up in terms of the life science opportunities that we like to look at in the stage. And, whether it's a medical device or it's a diagnostic or it's a therapeutic, there's different applications of principles that our life science committee, which is much more educated than me in terms of, what do we want to bring through the group? And they're a terrific screen for us as to, is this appropriate to bring it through? So we rely on their expertise highly to provide that upfront screening and to also then point those entrepreneurs in the right direction if we're not a good fit at this time. But we're fortunate with the amount of life science deals that we're able to get involved with and then syndicate, because they're always raising money for our whole life cycle of commercialization of the technologies. And obviously a lot of our tax dollars at work, creating these technologies, and only a small percentage of those are VC fundable, but many of them are very valuable. So there's a big opportunity there for angel investors. That's why it's such a great time to be an angel investor, because of all the challenges with our healthcare system. And now obviously we've seen technology even further move up the curve here in terms of its importance in our economy. And so to be able to be actively investing in these areas that, the future is coming quicker every day. So being able to be in touch with those trends and fintech and blockchain and impact opportunities, it's a very exciting time.
Can you help me understand how chapters work? How are they incentivized or disincentivized to work together? How do you set one up, or how do you find one? There's Keiretsu Midwest, there's Keiretsu Chicago. Like, what am I looking at when I'm looking at those as an entrepreneur?
So angel groups at a high level, there's 250 individual angel groups across the country, maybe even more now. About of the 10 plus million accredited households, there's a few 100,000 that made an angel investment last year. So it's less than 3% make one 10K investment. So if you think about the traditional angel, somebody writing 25, 50, 100K checks, that's really the 1/2 of 1% of the accredited population in the US. So it's a huge potential where more folks could be involved with angel groups or doing angel investing, but few do. So angel groups are set up to provide that organization support, but they're not broker dealers, so they're not taking a percentage of the transaction, and so there's very limited economics to create sustainable angel groups, and that's what I've studied my career on. Keiretsu Forum is set up where we have a built-in syndicate to be able to share the best deal flow with each other and then also be able to build membership together. And that creates a lot of synergies, which allows us to become much bigger. So we have Tech Ghost Angels down in Southern California. There's Golden Seeds. There's a few other syndication-oriented angel groups, but everything we look at Keiretsu, we want to syndicate. By definition, we're syndicating within our region and within our region-to-region network. So Keiretsu Forum local chapters are kind of each like any regular local angel group that you'd have. It's the chapter of members within Seattle or Vancouver, BC, or Denver or Boulder or Chicago or New York. It's a group of members in that geographic area. And obviously, we used to do monthly forum meetings in those geographic areas. Now everything's virtualized, so that's created a lot of opportunity for angel investors to participate from wherever they are. And so we have a lot more cross-chapter jumping into meetings. So yesterday we had our Vancouver meeting. Today we have our Bellevue meeting. Tomorrow we have our Seattle meeting. But realistically, anybody can attend any meeting now that the geographic boundaries have been dropped. So that's been an interesting transition here the last 6 months. And then the regions are like we run the Northwest and the Rockies region. And just the way that Keiretsu was set up originally when we organized the structure, it was basically by geography. And so each regional president would have a certain level of geography and then have chapters within that geography in order to be able to syndicate the deal flow. And then each month we report on the progress and which companies are doing well, which ones are done with due diligence, which ones are ready for funding. And then the best opportunities obviously would syndicate. Once they get DD done, they're raising capital, then it makes it real easy to go from one region to the next. And that creates a real quality deal flow effect because we're always pulling in deal flow, not just from Seattle for the Seattle chapter, but the Seattle chapter is pulling in from the whole Northwest and Rockies region. And then we're also pulling in from the whole rest of North America and sometimes international additionally. So that helps out with the deal flow quality, syndication, and kind of evens it out month to month depending on what amount of deal flow that we have. So that's kind of how the chapters work, the regions work. There's also cultural differences, obviously West Coast versus East Coast in term sheets and in due diligence practices and things like that. So we're always kind of, sharing best practices with each other, what works, what doesn't work. And that's what it's allowed us to be able to, navigate the challenges the last 6 months and the last 20 years and continue to get better at what we do and helping the entrepreneurs and our investor members that we're, fortunate to have a chance to serve. And also working together with all the local angel groups in our regions. Typically, we syndicate deal flow very often and have about 10 angel groups as part of our Keiretsu syndication network now, as it's been a big priority here this year to try and support as many other angel groups as we can, because it's really important to have an angel ecosystem. These groups were in tough shape to begin with in a lot of cases, and now with COVID, it's made it even more difficult for them. So we're trying to do everything we can to help and provide deal flow and support.
I want to ask just kind of one clarifying question there. If I'm sitting here in Cincinnati as a Keiretsu angel, do I see deal flow from Detroit as well as Phoenix?
Yeah, so the deal flow is selected by the screening committees within each region, and then the deal flow syndicates around. So just this month here in the Northwest, we've got deal flow from the Northwest as well as the rest of the United States. We don't have a chapter in Phoenix, so if we had a company from Phoenix, it would probably go to Denver or go to Northern California. Again, now everything's virtual, so even the entrepreneurs, they don't have to travel. They just have to get on Zoom and they can go to any of the different virtual angel groups that are out there. So that's been an interesting phenomenon. So we usually have the companies start wherever we think they're going to get the most traction the fastest. So if we have a consumer products opportunity, we're going to send it to Cincinnati because we've got such a P&G presence there. And, if they like it, then it's likely to do very well. But we're limited on that here. If it's life science, it's going to go to Mid-Atlantic or the Northwest. Obviously, if it's software or technology. And it's not 100% like that, but we do try and, think about where we can get a company started. We're going to get the most momentum the quickest if they're outside of the geographic proximity where we have an existing active group.
As an angel group and as a syndicate, it seems like you would want as many members as you could who have money that they can invest and get around full. But I imagine there's probably a power law or an 80-20 of people in the network who are actively investing or actively participating in the DD process. Is there any downside to having somebody in the forum who just isn't actually very engaged at all?
Well, yeah, inertia kills most angel groups. They become social clubs as they evolve, over their life cycles that, I've studied for 20 years now. And so if you're not constantly adding fresh capital, fresh energy, angel investing has its own life cycle. People sell a company, they're excited, they're going to make some angel investments, and then it gets tougher. They lose some money, they get burned, an entrepreneur lies to them. Why am I doing this? I can do anything. I don't need to do this. What am I doing? And so there's a lot of reasons why 97% of the accredited households don't do any angel investing. It's because it's hard and most people lose all their money. So we're set up to try and help that. But you got to be, again, if you want to be passive, that's fine. But what are you contributing? Are you able to help out with due diligence? Are you able to invest? Are you a resource? Are you a connector? Do you have that passion for wanting to help entrepreneurs? I mean, if you have that passion, we'll find a way. We're happy to have you involved, even if you're a small check writer or if you're a family office and you just want to see the deals and write checks. Hey, that's great too, because that'll come in later on down the road as those companies get bigger. So everybody can participate. But if you don't have people pay a membership fee, if it's just free to join, if there's no expectations around participation, then eventually the inertia builds up and the entrepreneurs get very frustrated because if the investors aren't responding to due diligence, aren't responding, to their phone calls, and it's hard enough to get the entrepreneurs, they get a list of 50, 60, 70 interested investors. That's a whole nother well, how do you follow up with 60, 70 investors in 2 weeks, right? I mean, we've got a whole process for how to do that. But if you're not ready to do it, and as an investor, we need you to pick up the phone. We need you to answer them. If you indicate interest in a company, you got to respond. It's okay if you say, hey, I'm not interested, but, don't be ghosting people, right? And, we call a couple people every month and we're like, you got to respond. If you want to play ball, these entrepreneurs are working their tails off trying to follow up. They don't need you sitting there just not responding after saying you're interested, and obviously stuff happens. People travel, life happens, that's fine. We have a lot of flexibility and empathy for those situations, and we try and help support the entrepreneurs in that. But it's definitely a yin yang. If you don't have the angel engagement, the entrepreneurs aren't going to be able to get the momentum and the traction. It's just, there's so much wealth. There's so much, how do you create that middle ground where you create that momentum? It's definitely a delicate art and balance to do so. And managing the angel group at the chapter level, the regional level, we're excited to add, 6 to 10 members a month. We renew, 60 to 70 folks each year, but it's a constant game to add fresh capital, fresh energy, fresh due diligence resources. Because again, this is volunteer activity. People don't have to do this. They don't have to write checks to support entrepreneurs, and they don't have to volunteer to do due diligence. They have to want to do it. They have to have a passion for doing it. And if that's not there, then it's really hard to deliver on the value proposition that we offer both the investors and the entrepreneurs in terms of the process that we facilitate.
You said you've been studying this since you were in college. You probably have as much knowledge of angel investing generally as anybody else out there. What are some of the major misconceptions in your mind that people have of angel investing or working with angel groups like Keiretsu?
Well, there's the pop culture Shark Tank, version of angel investing. And I would say that's probably the biggest misconception. At least we have that pop culture kind of reference point now, though, whereas before, you talked about angel investing. Well, what's that? And then it's like, well, it's like Dragon's Den or it's like Shark Tank. Oh, okay. So at least there's kind of broad knowledge about what it means to be an entrepreneur, to pitch for money. And they do a good job with the show. And, most of the products are relatable and those types of things. But actual angel investing is not entertainment. It's not a show. And, most of the people doing it aren't billionaires already. So it's much more, benign, I guess. There's certainly a level of excitement to it, but it's not made for TV in that regard. So I'd say that's kind of one thing, just because he's watched Shark Tank doesn't mean he know how to do angel investing. Angel investing is very complex activity to manage. Most folks they have a career, they're very successful in business that creates wealth. And just because you have wealth doesn't mean you know how to do angel investing. And that's kind of the other misnomer. It's like, just because you're a wealthy person doesn't mean you have any idea how to structure and invest in a company. And that's where having a group that has a lot of folks that are experienced. So you have our new members come in and they join a mindshare forum with a group of older members who've been more experienced. And so they're able to share those experiences with each other. That's one of the new innovations we've done since we can't have physical meetings, where that used to happen in the back of the room during the cocktail hour. We'd introduce people and they'd talk to each other and they'd build those mentor relationships. So angel investing is just like any other entrepreneur activity. You got to really study it. You've got to have a structure around it, a process around it. And then you've got to have an investment thesis. You've got to make an allocation and you've got to commit to do it. Because if you just make a couple investments, of course, we've all heard about, the person who made one or two investments and, hit Amazon or hit whatever it was. And, they got lucky, and that's fantastic. Again, God bless America, but that's not the typical situation that happens. Most of the time people lose all their money, and that's not the story that they tell on Shark Tank, So, being able to be honest about that, like, look, this is high risk activity. You got to be diversified. You got to make 10, 20, 30 investments if you're going to have a good chance of putting the law of large numbers to work for the benefit of your portfolio. But this can be a very productive way for people to participate, invest in technology, invest in life science, invest in things that are meaningful for them to get a lot of, psychic and other value besides just financial return. Because most of the angels that we work with, again, they're not in it to hit the next unicorn. That's not why they care about these companies and show up. They care because people cared about them and, help them along their journeys, and they want to give back. And I think that's what America's all about. How do we help each other be successful as entrepreneurs and as investors? And it's not this, win-lose thing. And it's not this big negotiation. It's a lot of hard work. And so to be able to support these companies on these long journeys where they need capital, they need support, they have health problems. We talk about the mental health of our entrepreneurs in the United States right now, and it's not good. The antidote to that is having, supportive investors, supportive fellow entrepreneurs to share challenges with, and having a strong cap table that's an asset to the company, that's supporting the company is, I think another area that can be very, very helpful. So, when entrepreneurs decide to work with angel groups, they think about, I need $500,000 to build my product. I need money for marketing. And so the other misnomer is, no, you're getting a relationship with a lot of very successful people who want to see you be successful. And so how do you manage that relationship and make the most out of it? So what starts off as a financing transaction, that's really at the end of the day, that's just the paperwork, but it's all the trust and everything that's built up in the meantime to make sure that we're doing everything we can to set ourselves up for success and be able to obviously achieve our financing goals, but then to be able to, reinforce our business and our technology and whatever it may be with the extra network effect that, really pays big dividends when, things like this happen. Historically, the world's been a real challenging place. We've had it kind of easy the last 10 or 20 years, but if you look back over the history of time and the history of entrepreneurship and exploration, not for the faint of heart, So it's, I think we're getting back into kind of more of what we would typically have experienced historically here, and that entrepreneurial times are now, it's very challenging, and you want to do everything you can to set yourself up for success and to have that support network.
You mentioned kind of this diversifying your portfolio. You need to have an investment thesis. You need to be committing to 30, 40 deals, whatever it is. I'm curious, as Keiretsu, man, I told you I'd mess it up. Keiretsu. How do you compare kind of aggregate returns versus funds? So there's an inherent opportunity cost of investing in all 30 to 40 Keiretsu deals versus putting a $300,000 to $400,000 investment into a private equity firm or a VC firm. How do you look at IRR or whatever it is?
So yeah, investing in like the Keiretsu Capital co-investment funds or the other angel group sidecar funds or accelerator funds, that's a great part of the portfolio, and it gives you access to more deal flow, again, access to more relationships, and that can be a great way. Again, if you're going to be passive, so where are you going to be active? Where are you going to be passive? Where are you going to allocate your time? Where are you going to allocate your capital? And so to be thoughtful about, where can I invest, get access, and then where can I put my time where it's going to have the biggest impact, and I'm going to get the most value return on that for, wanting to spend the time and do it, feel good about it, feel like I can have a positive impact, all the things that we want to do as entrepreneurs and as business people. So that's kind of the trade-off. Is it's not necessarily around financial return. People generally aren't optimizing for financial return. They want to get a return. The return they're trying to optimize is to avoid losing money, which, again, no matter how much capital you have, you lose 50, 100K, it stings. It hurts, because you bet on that company and you lost. And we all want to believe in entrepreneurs, right? And unfortunately, when it comes back around that they weren't being truthful, or that it just didn't work out for whatever market conditions, or the worst thing is like, you invest and then the entrepreneur gives up a month later or 2 months later or something. It's like, what do you mean you give up? What do you mean? I didn't give up. How do you think I made the wealth I had to invest with you? It wasn't by giving up, so that's, quite frustrating. So just being able to, allocate your time, your capital in a way that, is going to be sustainable for an extended period of time, because we all want to travel. We have different things we want to do. Our lives evolve and change, and we might find another entrepreneurial idea that we want to jump onto. And so you always benefit from building your network, building your relationships. And that's one thing. As entrepreneurs exit, they're looking for what's next, becoming part of an angel group, investing in some investment funds. That's going to build your relationship network. It's going to increase your opportunity cost of the people you get to know and the opportunities that they're looking at. So while investing in a fund can kind of dilute your returns on one hand, the more companies you have in your portfolio, the chances of you losing all your money, go way, way, way down. And you're likely to get the market return, the kind of mid-20s IRR that historically has been projected. And obviously, your chance of loss when you're investing with a big group of investors is much less than if you're out on your own with, making your own investments, or with just 2 or 3 people, because then it's very binary and the company's not in control of its fundraising. They're looking to you as the rich uncle to manage the fundraising, which is not a position you want to be in either. That's not a fun spot to sit in. I've done that a couple of times, unfortunately. So to be a thoughtful contributor as part of your angel impact portfolio, I mean, most of our members want to pull the trigger themselves. I mean, we've had our Keiretsu Capital co-investment funds available to all of our members for a few years now, but it's really only like 3% of our members that actually participate in the funds. And the ones that do, they love it because they get the automatic diversification into 40 companies over 2 years. But really, the rest of the members, they're there because they want to pull the trigger, and they want to pick the companies, and they get a little bit of an adrenaline rush every time they write that check or sign the docs and send it off. So, but they fully support, whatever mechanism people feel is the most productive for them for their investment, how they want to do it.
My last question relates to this period of time that we're in right now. I know a lot of angel groups, probably a large part of the reason they get together is to get together, and it's partially a social activity. So with everything being virtual now, do you think that has any long-term or permanent effects on how angel groups will operate? And is that for the positive or potentially a risk?
Well, I think there's a lot of silver linings to it. You're exactly right. Angel groups is a social investing activity by definition. So now without that, we've all had to innovate. The new frontier is, how do we create as much interactivity as we can through Zoom, through all the other follow-up events and committee meetings and socials and thought leadership and all the other activities. But everyone gets Zoom fatigue, right? So we're always trying to, just like you guys, innovate, try and see how we can be more interactive and, honestly be a little more produced, of an event like a Shark Tank would, kind of moving a little bit the media direction, because now we're all media companies since we're not putting on in-person events. That's how the content's being delivered. As you guys, I'm sure, have been on plenty of meetings where it's not done very well. And it's a little frustrating, particularly for the type A entrepreneurial personalities that we deal with. So it's important to be very good at organizing, facilitating the meetings. Angel groups have to adapt to this new online investing environment. And we had the question in March, will angels invest based on online interaction with entrepreneurs? And it was a great question, because for 20 years now, the idea of online investing has been a very small percentage of the actual investing that happens. So, but it has happened. I mean, obviously the angel investing community folks with high net worth have done extremely well in the current situation. If you look at the market caps and the public markets, and folks that have capital invested are doing terrific. So there's plenty of liquidity out there, and people are actively, aggressively supporting their portfolio companies. And we're seeing large capital being placed in the companies we're supporting, which is terrific. But for folks who are brand new, just getting started, if you're a brand new entrepreneur trying to go out and network, where do you go? I mean, to try and, work your way from the bottom up through meetups and things like that. Like, I mean, at least you used to be able to go and network and build relationships. Now it's all online. I mean, that's going to be interesting to see how that works itself out. But even those mixers and networking activities have evolved to be able to provide some support and function. But the network you have is the network you built. And there's no shortcut to that. As an entrepreneur, it's one of your biggest assets. So I think angel investing will be permanently changed from this. I think Keiretsu Forum, we will maintain a significant virtual presence going forward, even when we can return to doing in-person meetings. But just the benefits are very high. Again, a lot of sunk cost and effort to put on an event, to travel, to do it, to print, all the things involved. The virtual technology is certainly able to bring in more people to participate without people having to get in their cars and drive over there. Of course, you lose the benefit of the in-person interaction, so we're doing what we can to replace that in the meantime, but it'll be some hybrid version thereof. And this is going to be around for a long time. So again, most of our investor group is, in their 50s, 60s, they're in that higher risk population potentially. So we obviously want them to feel comfortable. But, angel investing is risky enough as it is. People don't want to risk their health, to go to a meeting. So it'll be interesting to see. So far as we survey our members every month, they're very happy, over 80% very happy with the online format. They see more benefits than drawbacks. And we think with the mindshare forums and the small group activities that we're doing to supplement that in-person connection and build those trusted relationships, we think that'll further push that along. And we think there's just a lot of opportunity for more online syndication, online support. We think there's an opportunity for the angel community now that we're not worried about putting on physical events. How can we focus on the deal flow, focus on liquidity, focus on bringing in more family offices and more coordination? We've seen an openness to more syndication and coordination with all the top most active angel groups in the country. So we think that'll be very healthy long-term as well, just to bring more capital into the ecosystem. It's also a lot easier for family offices to zoom into our meeting, whereas they may not necessarily be comfortable showing up in person. So it does open up a whole investor audience much wider for us to go after and market to than we had before. So I think those are all big positives that'll continue to drive the virtual, evolution of things. And it's been fascinating here as someone, as you mentioned, who studied this for 20 years, and it kind of one way of doing things. And then the internet came, and then a little bit different way of doing things. Now with this virtualization, it's had a big impact. And I think ultimately it's going to be the positive, and it's a great time to be an angel investor for all those reasons. So I encourage folks to, check out your local angel investing organization. And, we're happy to have folks as guests to participate and come check out some of the deal flow and the opportunities, and let everybody, determine what's the best fit for them and what's the best thing to allocate for their time and capital. But, really appreciate the opportunity to be with you guys, and happy to answer any final questions you guys may have.
The first time I heard about Keiretsu was in more of a pessimistic tone, coming from the pay-to-play, pay-to-pitch criticism perspective. I'd be curious to hear your thoughts on it from Keiretsu's side, on both why that exists philosophically as well as from a business model perspective.
Yeah, we could do a whole show on that topic, and maybe we should. I actually did a whole podcast on that topic a couple of weeks ago. It's a real challenge for the angel community, kind of the, pointed criticism on one hand for the groups that all you're doing is entrepreneurs are getting up for 5 minutes and pitching, and, that's it, right? Obviously, we're the furthest thing from that. We're putting in hundreds of hours of work, and just like any business, we've got customers and clients, and our business is successful if we take care of them. And with a funding rate of well over 80%, and funding 200 deals a year, and being the largest, most active group globally, we're pretty good at it. We encourage other folks to get involved and help support it. So it's a pretty easy kind of dismissive things for someone to say. I think it kind of demeans the entrepreneurs like they're victims, like they don't know what they're doing with their business. You pay for your attorney, you pay for your accountants, you pay for your CFO. If you're an entrepreneur and you need capital raising support, you can hire an investment banker, you can go find finders, you can look at angel groups, and we each have a different way of paying our employees and sustaining our business. And it's up to us to deliver on the value proposition. There's certainly, different varying, quality levels and service levels, even within the Keiretsu network, as there is within any angel organization. And some folks are going to have a great experience. And unfortunately, some folks, may not. And that's always something we're competing and we're working hard to make sure everybody has the best experience they can and gets the most value out of their time and their capital contributed. And we're fortunate to have, many, 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 very happy customers, but it's not for everybody. So, for entrepreneurs that have zero fundraising budget, good luck, going out and raising capital. It's not free to go raise money. And just because you've got a great idea doesn't mean, capital just floods in your door. Anybody telling you that capital raising should be free, I'm not sure what their agenda is, but it's not very helpful for you. Everyone's got to be aware of what they're paying and what they're getting for the services that you're contracting for. So, and angels, again, most of the time they're losing all their money. So you're out raising money. I think what's not often talked about is the fact that most of the time when these companies get funded, they return zero to their investors. So who's on the right and the wrong end of the coin there? I mean, no one's going to fault the entrepreneur for going out and raising the money, but then just when the background and the due diligence isn't done, it doesn't work out for whatever reason. So it's an interesting conundrum that the angel community has faced for 20 years is, how does it create a sustainable model? How does it have employees? How does it hire talented people to provide support for entrepreneurs and investors? And if you have no funding model to, charge for your services, I don't understand how do we support entrepreneurs? How do we create capacity? How do we recruit more angels and train more angel investors if there's no way to pay for it? And I assure you that, the angel investors aren't any better than the entrepreneurs are in terms of, the membership fees that they want to pay. So Keiretsu has a model where we charge the members, and we charge also the entrepreneurs as they go through the full process. There's no charge to come to deal screening. There's no charge up front. It's only when we believe and they believe and have a high confidence level that there's going to be success here. Because again, we're buckling up for 3 to 6 months of work, and that service and that support is not, it's something we can charge for on the back end. Unfortunately, it's not legally able to do that. With our international chapters and international angel groups are under a different regulatory framework, and they in fact can charge, and it's more part of the norms in Israel and in Sweden and in India. They can take success fees, and so they have a bit of a hybrid model. But unfortunately, in North America, we're precluded from doing that. And so while it's easy to take pot shots, it's hard to actually get in and do the hard work that's necessary to build the capacity to fund these companies and to provide the support that we do. So again, we could spend a whole show kind of going into the nuances of, should you pay to raise capital or not, and the budget and all the different ins and outs of that. And it's a great topic to dive into, but as a cheap shot for folks, I mean, anybody who's working to help entrepreneurs, my hat's off to them, because it's hard to do. And I don't think it serves any of us well. We all need to hold each other accountable for doing what we say we're going to do and delivering it. But it's a very deep topic that, again, we could spend probably a whole show on. So I'll stop there for now because I know we're running out of time.
This has been awesome, Nathan. Thanks for being here. If people want to learn more about Keiretsu Forum, where should they go?
So you can check us out online at keiretsuforum.com. Also, the Northwest region is K4 Northwest, k4northwest.com for our event calendar and details about what we've got coming up. And then Keiretsu Capital is our investment advisor with our co-investment funds. So you can check out keiretsucapital.com. We also have all the angel research papers that we've accumulated over the last 20 years posted up on Keiretsu Capital. So folks are just interested in learning about the history of angel investing and some of the research that's been done. We've got a great resource there as well on keiretsucapital.com.
All right, Jay, we just spoke with Nathan of Keiretsu Forum. I said it wrong in the interview. I told him beforehand I was going to say it wrong in the interview. Alas, here we are.
And in fact, your inability to pronounce Keiretsu made me question in real time my ability to pronounce Keiretsu. And I think I mispronounced it a couple times in the interview.
You know what? He says everybody mispronounces it. So maybe he was just being nice to us. But I will say that every founder that I have heard from in relation to Keiretsu Forum calls it Keiretsu Forum. So it's not just me. Or maybe it is. I don't know.
We didn't touch on this in the intro, but Keiretsu is a Japanese term. Do you know what it means, Eric? I have it right in front of me, but let's see if you know it.
It means that tingling sensation you get when you have hot tea.
Not even close. It's a Japanese term describing a group of affiliated corporations with broad power and reach. So far off from what you're saying.
I think there's some parallels there.
Well, this is our first dive back into angel groups since Todd Fetterman. What stuck out to you?
I like that they kind of embrace the process, the diligence, the slowness, the things that people say we don't like about angel groups. They say, that's what we are. So if you want to be part of this, here's the expectation up front. It's not, yeah, we'll be really fast. And then they're not fast. It's, look, you're going to get access to retail investors who want to be helpful, who are really going to buy into this vision, and it's going to be a different type of capital. And if you want something fast and you want to compete on speed, probably not your guys or girls.
This angel group investing, I should say, feels like an inherently difficult model to marry like all of the incentives between founders, investors, the angel group itself. Like, it's just really hard to perfectly align all those people, because inherently, if you're an angel investor putting money into startup companies, like, you're already taking a risk that, like, it's a net positive for humanity and entrepreneurship, but it's not necessarily like guaranteed to be good for you. Like, there's a little bit of altruism involved in this. And so naturally, you want to be able to have a little bit more process and vetting behind this, but you also probably don't have a ton of time to do it yourself, and you don't want to go through all these companies. So you have the group trying to streamline this process, but it takes time. Meanwhile, it's going to piss some founders off because of the time that it takes, but it's tough. How do you solve this puzzle?
It's an interesting trade-off, because if you didn't want to put any time in it and just capital and get the returns, you would put it in a fund. But obviously these angel investors want to put some time into it. They want to have some decision-making power. They want to be somewhat active. Maybe they don't want to be fully active like a solo GP would be. But I also think it's interesting that Nathan mentioned, look, if you're going to get in, you also have to have a plan for diversification. You have to understand what angel investing is. You have to make 30 investments. It's not just a one and done scenario. So it is this kind of middle ground between a fund and just kind of a solo angel. I think one of the things it does best is it aggregates deal flow. As a solo angel, you couldn't see and review 70 to 80 deals per month, especially if you're working a full-time job and everything else. So you get to see more. You get to make, ideally or theoretically, better decisions because you get to see more. So I think I think angel groups in general are a good thing to get people interested in angel investing, to get them actually deploying capital into ecosystems and founders that otherwise might not receive it from funds for whatever reason or from other sources. And I think if done right, it sparks kind of a lifelong interest in actually doing the investing into the future. And maybe that happens through a forum like Keiretsu, or maybe it happens through an angel group, or maybe they just go out on their own and do it. But I think it's definitely a good starting point for most people who are not steeped in this space.
I'm really interested to learn more about the due diligence process and committees within angel groups like this. So we're going to try to get someone from the due diligence team within Keiretsu Forum, but at least someone within an angel investing group to talk about their due diligence process, because that's something we haven't really dug into on the show here, Eric.
Yeah, like a deep dive into startup due diligence. And what does that mean?
It's one of those phrases that we toss around all the time. Like, oh yeah, we know that due diligence is part of the investing process, but like, we've never really discussed exactly how that looks.
And there's also just a difference between private equity due diligence and venture capital due diligence. And where does an angel group sit on that kind of scale of due diligence? I mean, on the venture capital side, a lot of times you'll hear an investor hears about a deal and they pretty much commit the money and they're in within weeks, sometimes in a hot deal. There can't obviously be that much due diligence done there. So you're kind of taking the lead investors. I mean, sometimes it's even like a lead investor who will do that and just kind of take everything at their word and do a little bit of a review period. But it feels like there's less diligence in maybe a traditional high-speed venture funding versus a private equity funding, which can take months and have a 45-day diligence period, plus have a data room, plus have consultants, plus you have this thing called equality of earnings, plus you have these third-party diligence reports that are written on the IT and all this. So I don't know what end of the spectrum it is when you're looking at Keiretsu, but I would love to hear about how they think about how much diligence is necessary.
We need to do more due diligence on due diligence. We are due to do due diligence on due diligence.
Done.
Well, we'd love to hear what you guys think about this episode with Nathan. You can tweet at us at UpsideFM or email us hello@upside.fm. If you have thoughts on angel groups in general, let us know at UpsideFM or hello@upside.fm. Maybe, Eric, it'd be cool to have a founder come on to talk about their experience with an angel group. And maybe we can get a little saucy and talk to a founder who has had bad experiences with angel groups generally. If you are a founder and you've had good or bad experiences with angel groups, hit us up. Let's tell a story.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter at UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming, find a way and get